morning traders, it's your host Dale here from the forexguy.com, and I'm going to be walking you through a bullish price action setup that I found on gold, and I want to actually trade this with my real money. So what's all this popping up here? So this is a nice little pitch from my battle station tool. Basically I made a chart scanner that basically scans all the charts you attach it to, and it's going to be looking for price action patterns and things like that, and it also works with your technical analysis. And you can see Litecoin, bullish candle, broke and closed above a resistance level. It's picking up your resistance level there. Bearish engulfing candle, bounced via resistance level. So you mark all your levels and that, and the battle station's smart. It picks up your levels and gives you more detailed alerts. So basically what you do is you throw this on your charts. It actually sends these alerts to your mobile as well. So you could be out, I don't know, shopping or something like that, and you'll get these alerts as well, so that you know that something of interest has popped up on the chart. So you can come back and you know which chart to basically look at and see if you want to trade it or not. But we're looking at gold today, and we're looking at this bullish rejection candle here. And if you're a bit of a newbie, a rejection candle is basically a price action event where the market moves down to a point and basically heavily rejects that and bounces. It's basically a bounce in the market, a very sharp bounce, and it manifests itself in the form, on the higher time frames, as in the form of these large wicks. And these large wicks basically show that, you know, that bouncing action there. And when you combine these rejection candles with areas on your chart that are of high interest technically, they have a lot of technical value, then you can start building up a high quality setup. Number one mistake for price action traders and people getting into price action, guaranteed, is the problem where traders, they see candlestick patterns and that's all they really care about. That's all they focus on. That's their entire decision making process. They see a bullish candlestick pattern and then they think that's it, it's a signal, just buy it. That's a really big problem. You can't trade candlestick patterns in isolation like that. They're meant to be combined with your technical analysis, price action analysis, and looking at key structural things on the chart like here, which I'm going to talk about in a second. But yeah, don't trade candlestick patterns just on their own without any other kind of reasoning or technical backing behind them. That's a losing strategy. And I know when you're a new price action trader and you learn about these patterns and you're hunting for those patterns on the chart, you're getting excited about them, you got to take a step back and actually learn how to do good technical analysis as well. Read the chart and read the situation on the chart, get your bias on the chart, which way you should be trading, where you forecasting the market is likely to go, and you kind of tie the candlestick pattern in with all that. And what I've done here, this is basically my view on gold at the moment. So sometimes it's not about horizontal levels and trend lines and things like that. Sometimes you get these structures forming, and basically these structures are, you know, what the market is currently respecting. In this case, I'd call this a squeeze structure, where we're actually getting lower highs on the top end and higher lows on the bottom end there. Okay, and the market's basically bouncing in between. And what usually happens with these squeeze structures is they get to a point where they get really squeezed up, and then they fire off a breakout in one way or another. It's very hard to tell which way that breakout is going to occur. Sometimes the market will get to the choke point here and then basically look like it's going to break out, and that ends up being a huge fake out, and then it actually drops the other way kind of thing. So that's basically what happens. The market squeezes up and then basically pops in a certain direction. But right now we can still see there's a bit of room to move to the next part of the structure here. So we do have a little bit of upside potential here. So basically what I was saying before is you tie your rejection candle in with your analysis, and we know the market is respecting this structure here, the boundaries of this structure. Now we've actually got a rejection candle which tells us that the market is bouncing off the bottom of that structure. That leads us to basically make the conclusion that the market wants to cycle through, come back up and test the upper side of that structure here, the resistance side. What I'm going to do is I'm actually going to enter a trade here with my trade panel. So let me open that. Alright, so this is my trade panel. This is another tool that I've made, and basically what it does is it makes placing orders really easy on MT4 and MT5. So you set up your entry criteria. So what I want to do here is actually enter on a bit of a pullback here. I'm waiting for the market to pull back a little bit, and that gives us a better entry price. So generally with decent sized ranged candles. The market will correct a little bit before it actually fires off. Usually go for around the halfway mark, the 50 mark, but I usually just go now these days a little bit shy of that, just in case the market almost reaches the 50%, but it doesn't actually tap it. So I go for 48, and target candle is number 1, because we count backwards in time series. So 0, 1, 2, and back like that. So this is candle 1 we're targeting, because if I wanted to, I could tell the panel, what's this candle here? This is candle 6. I could tell it, I'll go for a retracement entry on candle 6 here, on this candle here. So you can switch it up and customize, what candle you're actually focusing on with these settings. But we're going to stick with number 1, and stop loss, target candle 1 again, because it's making a higher low here. So we want to get below that swing low. We can add some points to that. Gold is actually, we probably want to add about 50 points. It says pips here, but basically 1 point is 1 pip for gold. As you can see here, spread 29 points, 29 pips. We're dealing with those points, so if we added 50, so we give ourselves a bit of clearance. So we're going for the retracement entry here, and we want to target at least 3 times reward. So whatever money I risk in my entry to stop loss distance, I want to get about, 3 times that at least. That's a dollar sign. Terrible dollar sign. Yeah, so we want to get at least 3 times what we risk down here. Oh God, I can't even draw a dollar sign properly. Anyway, so basically the reason I go for the 3 times target is it just works out beautifully mathematically in the long run, where every winner that you get will absolutely destroy any losers that you had. Trust me, the 1 to 3 minimum is usually what you want to go for. So we'll set that here. Risk reward target, it's already set as 3 by default, and that's pretty much it. Unless you want to put some trailing stops in, or move to break even or anything like that, you can do OCO and all sorts of fancy things. We don't really need to do anything like that, and we're going to hit the buy button so it knows we want to set up a buy trade. And look at that, it's set it up for us, and that 1 to 3 target looks beautiful. So if the market does go through another bullish cycle of this pattern, we should hit our target quite nicely. We'll get a nice trade here. Yeah, if you want to learn more about this panel, I have a YouTube playlist if you want to check out its features and what it can do. You can also download a demo off my website if you want to play around with it. So we'll close that off, and basically that's it. It's just a really simple structure trade based off a price action signal. It's just logic, We've got a structural level that the market is using to turn around. It's a bouncing point, a turning point in the market. We've got a bullish signal here, signaling that the market's actually turning around here and bouncing and wanting to push up off this level. And we're just riding out the next cycle of this squeeze pattern and setting our target just under that structure there. So hopefully we get that 1 to 3. With the retracement entries, the first challenge is obviously to get triggered, and then once we're triggered, we want to see some follow through, and hopefully we do see some upside, before the weekend. So I'll leave the video here, and I'll come back and we'll see how this all unfolded. Hey guys, I'm back a few days later, and bit of an interesting twist to this one. I didn't hit my profit target, unfortunately. It kind of sucks when this happens. My target was just above this high here, just a few points off it. The market did not hit it, and we actually seen the bearish reaction off the top of the squeeze pattern here. As you remember, I explained the market is basically using this squeeze structure right now as its like focus point. It's turning around at these structural levels. So it didn't actually tap the top structure there, which is a shame. I was so close to hitting my target, but unfortunately I didn't get it. Sometimes this happens. It's frustrating. Welcome to the Forex market. These kind of things happen. It makes people angry. But I've been doing this long enough now to sort of like chill out about this kind of stuff now. What I've basically done is I had my entry down here somewhere, and I exited basically about 1 times profit. So I got something, but I didn't get the 3 times up here that I was kind of hoping for. So I know some of my videos on YouTube, they have fantastic endings where I get really high profit targets. Some of the videos I show some losers, and in this video, it's just going to be a mediocre outcome. And again, that's Forex for you. If you're new, you can't expect these massive trades to develop all the time. It's all about reading the market structure. If you see a big bearish reaction come off the top of the structure here, you're seeing that bounce, well, yeah, the bullish move of the bouncing that's going on between this structure is probably over, and we got some severe selling happening this session. So just decided to make the call to close the trade with what I had, which was 1-to-1, 1 times reward. I've got some other trades going at the moment, so hopefully they pick up and kick off. For gold at the moment, because we had this bearish reaction, I imagine that the market is probably going to come back down to the support here of the squeeze structure. But if a buy signal does pop up here, I would probably avoid taking that now, because you've got to measure what your upside is, and you can see there's not going to be much upside till we get to the top of the squeeze structure there. So you'd probably be lucky to get 1 to 2 out of a trade that printed around here. So what we would do now is kind of just wait and start to really look at breakout potential here, because this squeeze pattern is getting really compressed in here. And like I said in the first part of the video, what happens is it gets squeezed up and it will usually break in a certain direction. Once the market does break out of these squeeze patterns, they can create very violent breakouts. So you can be onto a really big winner if you can catch the breakout in the right direction there. So that's this price action demonstration done. Hope you enjoyed it, and if you want to learn more about price action trading and this kind of stuff that I've spoken about here, or if you want to learn about my tools that I showed you in the first part of the video, which I'm using every day to kind of enter the markets and help me out with certain aspects of trading, feel free to check out my website, theforexguy.com. Those tools that I showed you, they come in a tool pack which you can download. You can get a trial version of that. The full versions are actually for the War Room members, so they were made for them initially. We're me and the traders in the War Room. So feel free to check out my site, and I wish you all the best with your price action trading or your Forex trading, whatever path you decide to take. And I will see you in the next video.